Oakville is doing the heavy lifting there. Benchmarked at just under $1.17 million composite, down around 4%. One of the most resilient markets in the whole GTA. Burlington came in at just under $1 million composite, down around 4%. Milton is one of the more affordable Halton options at just under $895,000 composite. Durham region, Ajax, Oshawa, Whitby, Pickering, Clarington averaged just under $845,000 across just over 700 sales. This is the most affordable of all major 905 regions. Property types and what's selling and what isn't. Now let's talk about these types, because not all segments are moving the same way, and this directly affects what you should be buying or selling right now. Across the GTA, detached homes had just under 2,800 sales in April, the dominant segment. Year over year, detached sales were up around 9%. That's actually the strongest performing category. Average price for the GTA detached is just under $1.4 million, down around 4% year over year. In the 905 specifically, detached average just under $1,260,000. Detached homes are holding value better than any other segment right now, and they're moving faster. Semi-detaches had just over 560 sales, with the GTA average of just over $1 million. Townhouses had just under 1,000 sales at just under $840,000 average. Condo apartments had just over 1,550 sales across the GTA in April, at an average of just under $640,000, which is down 6% year over year. In the 905 specifically, condo apartments averaged just under $575,000. Condo sales were actually up around 9% year over year in volume, meaning people are buying, but they're buying at a lower price. The benchmark for condos across the GTA is down nearly 9% year over year. The single worst performing segment. If you're a condo seller right now, that's the reality you're facing. If you're a condo buyer, you have the most negotiation power of any buyer in this market. What the economic indicators are telling us. Let's quickly look at the macro backdrop, because it's influencing everything that's happening in the GTA market. Real GDP growth in Q4 2025 was negative. The Canadian economy contracted slightly. Toronto employment growth in March of 2026 was also negative, down slightly. The unemployment rate in Toronto hit just over 8% in March. That's elevated. Inflation was just under 2.5% year over year as of March of 2026, running slightly above the Bank of Canada's 2% target. The Bank of Canada overnight rate is sitting at just under 2.5% as of April of 2026, which is significantly lower than where it was at the peak of the rate hike cycle. The prime rate is at 4.5%. Mortgage rates are just sitting under 5.5% for a 1-year fixed, just over 6% for a 3-year, and just over 6% for a 5-year as well. Those are still meaningful carrying costs on $1 million plus homes. TREB's own commentary notes that despite lower home prices and lower borrowing costs acting as a catalyst for some buyers this spring, there is still substantial pent-up demand sitting on the sidelines. Trade uncertainty and geopolitical tensions are cited specifically as factors keeping some that would-be buyers very cautious. If and when the uncertainty clears, TREB believes further improvements in the market activity would actually follow. That's the upside scenario, and it's a real one. What does this mean if you're in Vaughan right now? So let's bring this all back home. What does all of this actually mean if you own a home or you're thinking about buying in Vaughan? If you're a seller in Vaughan right now, the market is moving. 122 sales in April is real activity, but you need to be priced correctly, and that's what's key. Benchmarks are down around 6% year over year. Buyers know what comparable homes are selling for. The days of listings high and watching offers roll in are over for now. Price it right out of the gate and you will sell. Price it optimistically and you'll sit. If you're a buyer in Vaughan, you're in arguably the best buying position this market has ever offered in years. Inventory is up relatively to recent history. The sales to new listing ratio says you have negotiation power. Months of inventory at 5.7 months across York Region confirms that no urgency, driven frenzy. You can take your time, put conditions in your offers, and push on price. The data backs you up. If you're a condo investor in Vaughan or the broader 905, the numbers are the numbers. Benchmarks are down around 12% year over year on apartments. Rental vacancy at a 5-year high, and carrying costs still very significant. The case of buying a condo as an investment property right now needs to be built on a very long time horizon and a solid understanding of your monthly cash flow. Do the math before you buy. April numbers tell you a nuanced story. More buyers are showing up. Fewer new listings are hitting the market, but prices are still down year over year and the economy has headwinds. For Vaughan and the 905, it's a market of opportunity if you're a buyer, and a market of patience if you're a seller. The fundamentals of this region, population, infrastructure, quality of life, they haven't changed. The market will reflect that again. It just may take time, but it will get there. If you found this breakdown useful, drop a like and subscribe below. I go deep on the GTA market every month when Trev drops their numbers, and I'll see you in the next one.